Hello everyone. Till now we have discussed the balance sheet and profit and loss account of Tata Motors Limited. Also, I have covered ratios that how with the help of how you Motors Limited. Also, I have covered ratios that how with the help of how you can analyze the performance of company and how company is working, right? So these what we have done, we have covered till now. Now, what I will be doing, I will be showing you the some glimpse of Tata Motors financials to you, right? So this is the last session for analysis of financial statement of Tata Motors. After that, I will be taking some more sector companies, and after that, we will do analysis of all the companies in one session, right? So just give me a moment. I will be sharing the file. Yeah. So if you see here, this is the glimpse, or you can say financial highlights of Tata Motors. So we have already covered everything, but I like to give you the summary of financials. So if you see net sales is given here. Total income is given here. Now, what is total income? Total income means sales plus other incomes, right? Here, total income means sales plus other income. If you see the sales of company is 47,030 crore rupees and total income is 47,895 crore rupees. It means it includes other incomes like rental income, interest income, dividend income, etc. Right? Total expenditure is 45,559 crore rupees. PBIDT. What is PBIDT? Profit before interest, depreciation, and tax. Right. So PBIDT is 2,385. Then PBIT. PBIT means profit before interest and tax. So they have reduced depreciation from PBIDT and they have calculated PBIT. Right. And if you see profit before tax is negative 2,312. It means now they have reduced interest and their profit is in negative, right? PAT is also in negative and cash profit is 1,286. Now, if I talk about cash profit, how they have calculated cash profit, right? How they have calculated cash profit, right? This you can check from cash flow statement also. But what I will be doing, I will be giving you idea here itself, right? When you calculate PAT, so what you do, you reduce lots of non cash expenditure, right? Here, if you see PBIDT, right? So here, this PBIDT includes depreciation, right? Now, once you are reducing depreciation from PBIDT, you got PBIT, right? So what you have done, you have reduced depreciation. If you see, so what is the depreciation amount here? If you see, so depreciation amount is something around 2,290 crore rupees, right? So if you reduce 2,290 crore from 2,335, so you will be getting here 45 crore rupees, right? Now, if you're reducing depreciation amount from this amount, so you will be getting here PBIT, right? Now, once you will be reducing interest amount, you will be getting PBT. And once you will be reducing tax amount, so you will be getting PAT, right? Now, if I want to calculate cash profit, so depreciation is a non-cash expenditure, right? So what you will be doing here to find out this cash profit, so what you will be doing, you will be adding the depreciation, right? Now, there can be some other expenses, other non-cash expenses. Like let's suppose company has created provision, right? I will try to find out here. Otherwise, we have to check the schedules, right? We will check it here. So here it is difficult to find because we have read the schedules, right? These all expenses, they might include non-cash expenses also, like provision, like company has paid provision, loss on sale of fixed asset, right? These all are non-cash expenditure. So what company has here, company has added all the non-cash expenditure and company found cash profit that is 1,026 crores, right? So when you will see the CFS, in CFS, you can find out this thing, right? Here, what company has done. Company has taken profit before tax, right? After that, what company is doing? Company is making some adjustments. Company is making some adjustments and changes in working capital company is doing. Then company's flow after working capital is this, right? Then cash flow from operating activities, cash flow from investing activities, financial activities, right? So net cash flow is given here, right? Now, if you see what is the closing cash balance of company, closing cash balance of company is 2,365, right? So you can see cash balance of company is positive, right? So this cash balance includes previous year cash also, right? So that is the reason what company has done. Company has found their cash profit and their cash profit is 1,286, right? So if you will see here, so cash profit will be positive in most of the years because they are not providing adjustment for depreciation and non-cash expenses. So according to you, which profit is the best indicator of company performance? Obviously, PAT is the best indicator, right? Cash profit is not the best indicator. Why? Depreciation is actual expense, right? Even though you're not incurring any cash, but initially when you purchase any asset, so you have incurred cash, you have paid cash to some parties to purchase of equipment, right? Or machines. So definitely you should charge depreciation. So here, if you will decide that whether to invest into a company or not, so you will do analysis of PAT, not cash profit. Cash profits are also important, but PAT is much important to make analysis, right? Further, if you see sources of finance is given here. So equity paid up capital is 765 crore. Reserve and surplus of company is 18,267 crore. Company is having good reserves with them, right? That is the reason they are able to fight with the losses, right? So that is the reason Tata Motors is able to survive, right? Net worth of company is the total of equity paid up and reserve is going to be net worth, right? And company is having total debt of how much? 21,748 crore, right? Now they have given detail of assets, that is application of fund. So gross of company's asset is how much? 55,235. They have made investments, right? They are having cash and bank balance with them. Net current assets is given. Net current asset, how they have calculated? Current asset minus current liability, right? Total current liability is given here, right? Then further, if you see total asset value is here, right? Then cash flow details is given. So here, if you see, cash flow includes three activities, right? Cash flow statement includes three activities. First activity is operating activity. Second activity is investing activity. And third activity is financing activity. Right now, with the help of cash flow statement, what we do, we try to find out the cash balance of organization. Right at the end of the year, how much cash balance company is having. Right, we try to find out this thing with the help of cash flow statement. Right now, if you see here, so first item is given, that is operating activity, second is investing activity, and third is financing activity. Right now, if I talk about operating activity, what is operating activity, right? So whatever transactions which you are making for operations of business, that will form part of operating activity, right? That will form part of operating activity, right? So here, what kind of transactions you will be recording? Let's suppose you have performed some purchases, right? You have performed some sales, right? You are incurring some expenses. Huh? What could be the expenses? Expenses can be like electricity expense, right? You have paid salary, right? You have incurred some other expenses. So what you will be doing, you will be recording all these transactions in operating activity. But what do you have to do? You record only cash transaction. Depreciation is a part of operating activity, but it is a non-cash transaction. And with the help of cash flow statement, we have to find out the cash balance of the organization. So we will be ignoring depreciation part, right? So how usually you will be preparing the cash flow statement? You will be starting with profit before tax. And the very first item which you will be writing here, that is profit before tax, right? So here what you have done, you have written profit before tax, and profit before tax is negative, right? Now adjustment. What is the meaning of adjustment? Adjustment means you will be adding back non-cash transaction, right? Non-cash transaction you will be adding back. What could be the non-cash transaction? Depreciation, provision for doubtful debts, right? Or you might have recorded loss on sale of assets, right? You will add all these items, right? So if you non-cash transaction amount is how much? It is 4,273. So what you will be doing, you will be adding back this. Now changes in working capital. What is changes in working capital, right? Now, if I talk about working capital, so working capital includes current assets and current liability, right? Now I'll be drawing one balance sheet for you for your better understanding, right? Now, if you see here, this is the balance sheet year 2020 and 2019, right? Now, if you see here, in year 2019, company was having debtor balance of 1,000 crore rupees, right? In year 2020, company was having debtor balance of 1,200 crore rupees, right? Further, I will take another transaction here, inventory, right? Let's suppose company was having inventory value of rupees 1,500 crores in 2019, and here company is having inventory balance in year 2020 is 1,100 crores, right? Now you will find a change in the value of debtors. Previously, the debtor value was how much? 1,000, and in current year, debtor value is how much? 1,200 crore, right? It shows that company has given credit of 1,000 crore in previous year, right? And in current year, that is 2020, company is giving credit of 1,200 crore. it means company has provided more credit to the debtors, right? Now, how company will be providing the credit to the debtors? Here, this is your company, and what you are doing, you are selling goods on credit to your debtors, right? Definitely, if you are selling goods on credit to your debtors, right? How much? 1,200 crore. So it means what you have sold goods on credit. You have sold goods on credit. Now, definitely, if you are selling goods on credit, so you will be in lots of manufacturing expenses, right? You will be incurring raw material to produce these goods. You will be paying salary to your employees, and you will be incurring lots of other expenses to manufacture goods, right? Now, if you are giving credit, so definitely what you are doing, you are blocking your money into these transactions, right? So here, if your debtor is increasing, it means you have blocked 200 or more, right? We have blocked 200 crore more. It means there will be reduction in your cash balance, right? It means there will be reduction in your cash balance. Are you able to understand? So this is what a change in working capital. So what is change in working capital? It means when your debtors are increasing, or you can say when your current assets are increasing, right? When your current assets are increasing, it means there will be reduction in cash. There will be decline in cash, right? If you see now here, in previous year 2019, inventory value was how much? It was 1,500 crore, right? And in current year, the inventory value is 1,100 crore. It means you were having inventory of 1,500 crore with you. Now in current year, the inventory value is how much? 1,100 crore. It means you have sold inventory of 400 crore. Yeah? You have sold inventory of 400 crore. And if you are selling inventory of 400 crore, it means you're realizing cash of 400 crore rupees with you, right? So whenever there will be decrease in current asset, it shows that there is increase in cash. There is increase in cash. So in total, if you see here, so adjustment or changes in working capital, here you are finding out positive value, right? So how they have calculated the positive value? There is decrease of 200, right? And there is increase of 400. So what is the net change? So net change is positive, that is 200 crore, right? So it's positive. So you will be adding that 200 crore into the cash flow statement, right? If I talk about liability part, right? So I will prepare this data again here for a better understanding. So 2020 and 2019. Right? Now, if you see here, so what is the creditor value? Creditor value, suppose it is 1,000. I will be taking the same number and 1,200, right? And you have taken some working capital loan. Right? Here I will take same number, 1,500 and 1,100. Right? Now, if you see here, if your creditors are increasing, previous year your creditor was of rupees 1,000, right? And in current year, the creditor value is how much? 1,200. It means you got loan or credit from your suppliers, right? So here you are getting cash-free goods from supplier, right? What supplier is saying, you can pay the this amount for your goods you have purchased after 60 days, maybe after 90 days, or maybe it depends upon the policies, right? So here you are getting credit of 200 crore rupees, right? Total purchases of 1,200. In previous year, you already purchased goods of 1,000 crore, and in current the value of creditor is almost 1,200. So it means creditor is providing you credit. So whenever there is increase in creditor, right? Whenever there is increase in current liability, right? It means there will be increase in cash. It means there will be increase in cash for sure, right? You have to understand this thing. Whenever you are getting credit from, whenever there is increase in current liability, it shows that there is increase in cash, right? Whenever, now if you see here, working capital loan, in previous year 2019 you took a loan of 15 crores, right? Today the value of loan is how much? 1,100 crore. So obviously why there is a reduction in the loan amount? It shows that you have repaid some amount to the bank, right? And whenever you are repaying some amount to the bank, it means your cash balance is decreasing, right? So whenever decrease in current liability, it shows there is decrease in cash, right? It shows decrease in cash, right? So what you have to do, you have to show net result into cash flow statement, right? This is how you have to prepare the cash flow statement, right? So if you see here, they have shown the adjustment for working capital, right? And if you see their changes in working capital is given here, they have done the total, sorry, they have done the total here, right? So if you add and less these three items, so you will be getting the result that is 6,743, right? So if you see here, that is cash flow from operating activity is 6,680 crore. What they are doing now, they are reducing tax amount from here, 6,743, right? And their tax amount is approximately 60 crore rupees. So they are reducing their tax amount from here, right? And they got the value that is cash flow from operating activity. Now, what is investing activity? Investing activity includes when you are buying assets, or selling any assets. So these transactions, what you have to do, you have to show in investing activity, right? So let's suppose company has purchased some machinery, company purchased some building, so it will reduce the cash, right? So you will be showing a purchase and sale of machineries or purchase or sale of shares. You have to show it here, right? So if their balance is negative, it means company purchased more as compared to their sales, right? Purchase of machinery is more than sales of machinery. Right? Financing activity. What is financing activity? Financing activity means when company is raising fund. How company will be raising the fund? Company will raise the fund by issue of shares, right? By issue of shares, or company will raise the fund by taking loan, right? By taking loan, or maybe there are other things by issuing debentures, right? And it will also include when company is redeeming their shares, right? When company is repaying their loan. So these transactions where you will be showing in cash flow from financing activity. If balance is negative, it shows that company has repaid more rather than borrowing from banks or by issue of shares, right? So here, if you see, so here it is negative balance. It means company is repaying more of their loan amount, or company is redeeming the shares. This could be the situation. Right? If you want to know more about these things, so you can check the schedules of Tata Motors app or downloading their annual report, right? So if you see what is the net cash balance, so net cash balance, how much it is? 217 crore rupees. How they have calculated? They have done the sum of these three terms. They have done the sum of these three items, and they have calculated the net balance here, right? Now, if you see the opening cash and cash equivalent balance, opening cash and cash equivalent balance is 2,145, right? And during the year, company has generated this net cash flow, right? So if you do the total of these two items, so here you will be getting the closing cash and cash equivalent, right? So this is what a balance which you will be showing in balance sheet, right? So I will show you closing cash and cash equivalent into the balance sheet. So just a moment. Yeah. So if you see here, they have given cash and cash balance, right? So it might include some other kind of transactions also. That is the reason there is difference in the amount, right? So it might include some other balances also. Yeah. This is how what you have to do. You have to prepare cash flow statement, right? Further, if you see, so here free cash is given how much? Free cash flow is given 4,212, right? So we can see the balance sheet. So it is near to this amount, right? So free cash flow balance is given how much? 4,212. Now, if you see, they have calculated the ratio. We already discussed these ratios: debt to equity, current ratio, return on capital employed, return on net worth. We've already calculated these ratios. Now, if you see what is the market price of shares, so here you will find the market price of share, that is 30.19 paise, right? Market capitalization. What is market capitalization? Market capitalization you will be calculating by multiplying the share outstanding. Share outstanding means number of shares issued into market price of share, right? Into market price of share. So you can see the market capitalization of company how much? 1,15,572 crore, right? EPS we have already learned. Price to book value we have already learned. Cash EPS means now in case of EPS they have considered profit after tax. In case of cash EPS, what they will be doing, they will be taking cash divided by shares outstanding, right? This is how you will be calculating the cash EPS. Now, further, if you see enterprise value is given. What is enterprise value, right? Enterprise value is sum of equity shareholder fund, right? Equity shareholder fund plus long-term debts, right? Plus long-term debt, right? So here, if you see, so enterprise value, it will include this balance, that is market capitalization, right? Plus it will include market capitalization and shareholder funds. They are quite similar, right? Plus it will include long-term debts, right? So if you will include long-term debts into this balance, so you will be getting 33,002 crore rupees, right? So this is about the Tata Motors financials, right? So now I will be discussing, I will be taking next company, right? And at the end, what we will be doing, compare between the sectors, right? So thanks a lot, guys, for joining this session, and stay tuned with us for more and better learning. Thank you.